Opendoor stock closed out Friday's trading session at $4.45 per share, up 18 cents or just over 4% on the day. That in itself was impressive considering the broader market was down. In the aftermarket, the stock traded flat, giving back just a nickel. Now, to some, that might look unremarkable. But after the kind of week we've had, with highs near $5, a sharp sell-off midweek, and plenty of volatility, it actually tells a powerful story. Consolidation at these levels shows strength. It means the stock has found new support in the $4 range and that $5 is shaping up as the next ceiling we need to break. But the real story isn't in a nickel here or there. It's in the narrative that's been building around Opendoor, one that combines insider alignment, retail power, and the intriguing possibility of a founder's return. And it's here that Keith Rabois enters the picture in a way that could prove transformative. Keith Rabois isn't just any investor. He was one of the key forces behind Opendoor's founding vision, part of the so-called PayPal mafia who have helped create some of the most important companies of the last 2 decades. His DNA is embedded in Opendoor's story, and lately, he's been vocal online about what the company should be doing. He's recognized the surge of retail interest. He's pointed out that Opendoor hasn't fully capitalized on that momentum. And he's been clear that what's needed is stronger leadership in areas like storytelling, innovation, and execution. That matters because retail investors, the open army, aren't just along for the ride. They're shaping the conversation. They're suggesting ideas, pushing for strategy shifts, and demanding that the board and leadership align with their vision. The fact that someone like Keith is echoing those points publicly validates retail's influence. It shows that the grassroots pressure is being noticed at the highest levels. Now, let's tie this back to the week we just had. On Thursday, Interim CEO Shrisha Radhakrishna bought shares of Opendoor himself. That insider purchase was a big moment. For months, retail had been demanding that leadership show conviction with their own money. Shrisha delivered, and he followed it up by posting online that other board members would soon be buying shares as well. That's the kind of alignment retail has been asking for. It's the shift from an inactive board to one that is visibly listening and acting. Combine that insider alignment with the constant hum of retail activism, and you start to see why this is such a unique moment. The open army is global. They're not just watching, they're participating. They're sending in product ideas. They're asking about AI integrations. They're pushing for better marketing, even pointing out that Opendoor doesn't rank highly enough on Google Ads. And they're relentlessly spreading the story online, keeping Open one of the most talked about tickers on Reddit and X. What Keith Rabois adds to this picture is credibility. Retail can demand change, but when someone with his history says the same thing, it amplifies the message. He's effectively telling the company, you've got retail attention, now don't waste it. Refocus. Tell your story better. Innovate. Align leadership with shareholders. That's not just noise, that's a call to action from someone who knows what it takes to build a category-defining company. And that's really the heart of the bullish case right now. This isn't just a stock bouncing around on short squeezes or meme chatter. It's a company being reshaped in real time by the convergence of 3 forces: insider conviction, retail activism, and founder DNA. Put those together, and you have the ingredients for a genuine turnaround. Let's dig a little deeper into why this matters. The iBuyer model, Opendoor's original approach, was capital-intensive. It required buying homes, holding inventory, and carrying risk on the balance sheet. In a high-rate environment, that's tough. Margins are thin, and the scalability is limited. That's why retail has been pushing for an asset-light pivot. The comparison to Airbnb and Uber isn't just hype, it's a roadmap. Those companies didn't own the underlying assets. They built platforms that connected supply with demand. Opendoor can do the same by focusing on being the go-to marketplace for sellers and layering on services, AI tools, and partnerships. And we're already seeing hints of this shift. Shrisha has highlighted Opendoor's AI capabilities, tools like Repair Copilot and Risk AI, and the new Key Agent app. These aren't just flashy projects, they're ways to make the platform more efficient, reduce costs, and provide value to users without carrying massive inventory risk. Retail sees this. Keith Rabois sees this. And together, they're pushing leadership to accelerate down this path. Now, add the macro backdrop. Rate cuts are increasingly expected later this year, possibly as soon as September. Lower borrowing costs will bring more buyers into the housing market, unlock more sellers, and drive higher transaction volumes. That's the kind of environment where a leaner, asset-light Opendoor can thrive. It's the fuel that can power the engine if the company is positioned correctly. So where does that leave us heading into this long weekend? To me, the story is clear. The stock is consolidating in a healthy way at higher levels. Insider buying has injected confidence. Retail remains energized, vocal, and global. And Keith Raboir's public comments add a layer of validation that the company needs to seize this moment. This isn't about predicting whether Monday will open at 450 or 470. It's about recognizing that a foundation is being built. A foundation of alignment, pressure, and vision that could transform Opendoor from a volatile trade into a true category leader. And here's the most important point: none of this requires blind faith. The pieces are visible. You can see them in Shrisha's purchase. You can see them in the board's new commitment to buy shares. You can see them in the Open Army's relentless engagement. You can see them in Keith's online commentary. The question is whether the company can put it all together and execute. If they do, the upside is massive. The housing market is a multi-trillion-dollar space. Even a modest slice of that, captured through a scalable platform model, can justify valuations far higher than where we are today. Eric Jackson's $82 target might sound ambitious, but in the context of a redefined business model, AI integration, and macro tailwinds, it becomes a realistic long-term goal. So as we wrap up this week, my bullish view is simple. Don't get distracted by day-to-day noise. Focus on the bigger picture. This is a stock in transition, a company being reshaped, and a movement that's gathering strength. The alignment of insiders, retail, and founder DNA doesn't happen often. When it does, it creates inflection points. And I believe Opendoor is standing at one of those moments right now. Keith Raboir's voice adds urgency. Retail adds passion. Insider buying adds credibility. Together, they're writing the next chapter of Opendoor's story. And if that chapter is executed well, today's prices will look like just the prologue.